Welcome to today's topic, the complete 2026 Schedule C Survival Guide for Sole Proprietors. This lecture is powered by Nasha Boomer, Bleem Professor and CEO of InfoTaxSquare.com, sharing his professional expertise and real-world experience to guide and support the learning journey of young professionals. Below are the topics that will be covered in this video. What makes a business expense deductible? How much of meal expenses can you deduct? What expenses must be spread over time instead of deducted immediately? Which common expenses are not deductible? Why are tangible property rules important? Do sole proprietors have to report all income? Why should you match your income with Forms 1099? What are the net operating loss rules? When must you issue Form 1099 NEC or 1099 miscellaneous? What is Form 1099K and why does it matter? Do sole proprietors pay unemployment tax on themselves? Can tax preparers rely on client information? Why is record keeping so important? Should you use separate business bank accounts? Now, we will explain these topics to help you gain a better understanding. What makes a business expense deductible? To deduct a business expense on Schedule C, it must be both ordinary and necessary. Ordinary means the expense is common in your type of business. Necessary means it helps you operate or grow your business. The expense must also be reasonable. For example, a massage to relieve work stress may feel helpful, but the IRS does not consider it a necessary business expense. How much of meal expenses can you deduct? In 2026, most business meal expenses are only 50% tax deductible. To claim these expenses, make sure you keep proper records, including the date of the meal, the amount spent, the location, the business purpose, and the business relationship of the people involved. One important thing to remember: entertainment expenses are no longer deductible, even if they are related to your business. Keeping accurate records can help you stay compliant and avoid issues at tax time. What expenses must be spread over time instead of deducted immediately? Some prepaid expenses cannot be deducted all at once. These include prepaid rent, lease payments, prepaid insurance premiums. They must be deducted over the period they cover. Which common expenses are not deductible? Many small business owners unintentionally claim expenses that are not deductible for tax purposes. Some common examples include entertainment expenses, country club or social club memberships, health club memberships, political contributions, most lobbying expenses, fines and penalties, federal income taxes, the employee portion of FICA taxes, clothing that is suitable for everyday wear, personal meal expenses, and the cost of a first home landline telephone. Understanding these limitations can help you avoid costly mistakes and remain compliant with IRS rules. Why are tangible property rules important? Certain repairs and improvements may need to be capitalized instead of deducted immediately. Materials and supplies may also be deducted only when used or consumed. Proper compliance helps avoid IRS issues. Do sole proprietors have to report all income? Every dollar received must be reported, including cash payments, check payments, electronic payments. Even if cash is immediately spent or withdrawn, the income must still be reported on Schedule C. Why should you match your income with Forms 1099? The IRS compares your tax return with information reported on Forms 1099. If income reported on Forms 1099 is missing from your return, it may trigger an IRS notice or audit. What are the net operating loss rules? For losses arising after 2020, no carryback is allowed. Losses can be carried forward indefinitely. Only up to 80% of taxable income can be offset in a future year. When must you issue Form 1099 NEC or 1099 miscellaneous? Businesses may need to issue information returns when paying non-employees. Form 1099 NEC. Used for payments to independent service providers. Form 1099 miscellaneous. Used for rent payments, royalties, prizes and awards, Other reportable payments. Taxpayers must also indicate on Schedule C whether required Forms 1099 were filed. What is Form 1099-K and why does it matter? Form 1099-K reports payments processed through credit cards, debit cards, third-party networks such as PayPal. The IRS uses this information to verify reported sales and reduce underreported income. Businesses should carefully reconcile gross receipts, refunds, discounts, processing fees. What happens if you do not provide a correct TIN? If a payee fails to provide a valid taxpayer identification number, the payer may be required to withhold 24% backup withholding from payments. Do sole proprietors pay unemployment tax on themselves? No. Sole proprietors do not pay federal unemployment tax on themselves. Cannot claim federal unemployment benefits. However, they must pay unemployment taxes for eligible employees. Can tax preparers rely on client information? Generally, yes. However, tax professionals must ask questions when information appears incorrect, inconsistent, incomplete. Reasonable inquiry is part of professional compliance. Why is record keeping so important? Good records protect your deductions during an IRS audit. Keep receipts, invoices, mileage logs, travel records. Without documentation, deductions may be denied. Should you use separate business bank accounts? While not required, separate business accounts make bookkeeping easier, expense tracking simpler, error detection faster, financial records more accurate. They also help keep personal and business transactions separate. Understanding Schedule C compliance is essential for every sole proprietor. By properly reporting income, maintaining accurate records, following deduction rules, and complying with IRS reporting requirements, you can reduce tax risks and keep your business fully compliant in 2026. If you have any question regarding Schedule C guidance for sole proprietors, you can contact us. Our phone number is 516-822-3100. Our mail is support@infotaxsquare.com. Thanks for watching.